I get the impression that we're sort of in, and actually, it might be interesting, although this Benner chart doesn't go back that far. Oh, yeah, it does. Okay. So I think that we're actually in, goodness, maybe like, not here. I guess maybe like 1931, 32, maybe. But I think it feels like, we're more along 1942, 43, especially with the way the inflation data is being reported. I don't think we see the big honking rally. That doesn't come till like 35. So it's kind of weird how, according to the Benner cycle, we're kind of like almost here right now. I don't know whether that really corresponds, but I definitely think price action wise, we're very similar to the 1940s. So if we look at the 1940s, what do we see out of the market? So, yeah, I think this is pretty similar. So here we are sort of bumping our way lower. Does that look kind of familiar? Remember the decennial report, all that kind of stuff. This, according to that January barometer, we don't bottom until November. But could we do something along these lines here through the rest of this year? I think so. And then we actually set up, 43, 44, 45 into that kind of rally window. I could very easily see that. And then some sort of rolling top for that, I guess, 25, right? After the Belt and Road stuff. We go sideways for a few years, maybe do like a little mini sort of recession here in North America, maybe Asian markets really nasty pullback, and then set the base for our next big growth push into the mid 30s. Well, I could see that. And so if anything, you go, you are here now. So if this is like 1940s comparison, we're like right down here. And things are pretty sanguine. People are pretty depressed. We're fairly close to some sort of pivot. And that's what our future looks like. So, just got to hang in there, folks. If we go back to the 1980s, I think we see a lot of similarities to that as well. Be interesting if we could get a chart to go back to the 1860s. That would be kind of cool. But if we went to the 1980s, I don't know whether we have this kind of scenario because interest rate trends are exact opposite right now. But, interestingly enough, here is 1982. Interesting. Look at the market in this case actually bottomed in August. So same sort of thing. I'd kind of go like maybe even right here. You are here now. We're going through this just nightmare of a down move, just brutal. And of course, nothing really to do on the long side. Once we get through sort of the fall and whatever the trough is, then we set up for that, 20. I think 23 is sort of our bottom, might be like late 22, early 23 kind of idea. I actually like the idea of us just going sideways for a while after we puke out here, but yeah, we'll see. Only time will tell. According to Larry Williams' decennial report, we actually rally smartly out of these lows. I can't honestly predict the future, no idea, but I do like the similarity of what I'm seeing here. And interestingly enough, right, what Mr. Williams said is we just got to get in front of this inflation problem. We already know the Great Reset's happened. I mean, it's done. As I sort of said there with Stewart, ironically enough, if you actually hear people talking about, the workers, they deserve higher wages, especially coming from the banksters of all people. You know that they have pulled off this con job. It's done. It's over. The con job was probably 2009 through about 2013. And now, interestingly enough, the whole world that we're living in now is the reaction to the con job. And if they're going to, go and give the workers a little bit of a raise here to make them feel as though they're actually being treated well, that is probably right on cue. That's exactly what they probably planned years ago. All right. And then in the middle of the COVID crisis, we're going to of course, shut all the economies down, which means the workers have no money whatsoever. So let's make sure that this gives us the opportunity, of course, to massively inflate the money supply. So let's go and give them sort of regular monthly checks so they feel as though their income is being stabilized. And then on the other side of that, we've inflated everything. All the prices of everything have all gone shooting up. We're going to have to throw them a bone and give them a little bit of a pay raise. And that's a conversation that Stuart had here today with you guys. Seems absolutely perfectly in line. Interestingly enough, what was fascinating about this cycle, though, was this part of this cycle in here actually was in a rising interest rate environment. And ironically enough, they often say that in March of 1982, that's when the interest rates topped and they broke, right? So we could, I don't know whether we can do this or not, but if I go compare and I go TMX, I think this will work. Let's see what happens. Yeah, there you go. So there's the stock market. There is the interest rate market, is interest rates. And you can see there is March of 1982. The interest rate market finally broke. And you can see that half of the reason why the stock market boom was so big was because interest rates actually started trending down in earnest. I don't know whether we can really expect interest rates to trend down now. Which way do interest rates look like they've been trending lately? Looks like they've been trending up, eh? But maybe, if we're really lucky, kind of like Larry Williams kind of thinking, maybe what he's thinking is, give us that M, and ideally, if we can get a small M inside a bigger M, then, there is your signal, and the stock market can take off if this does actually break. I could see that. And you actually get a nice little counter trend rally a la Larry Williams style on that event. But probably the most important thing you have to take away from this is that has not happened yet. So, yes, it is looking Emmy. Don't get me wrong. But it hasn't ended yet. So, anyway, stay tuned, valued viewers. Thank you.